Welcome to AM Best Audio.
Welcome to the AM Best Audio Podcast. I am William Borden, and joining us today is Katherine Antonello, President and CEO of Employers, a leading workers' compensation insurer focused on small businesses. Let's talk about workers' comp. Katherine, could you give us a couple general trends that you're seeing in the marketplace?
Yeah, hello, William, and thank you so much for having me today. So the general trends in the workers' compensation industry are very positive. Work comp remains one of the healthiest lines in the property and casualty industry. It's seen more than a decade of consecutive calendar year combined ratios below 100. And that has been driven primarily by the decline in frequency over numerous decades. We've seen that since, the early 2000s, frequency declining. Now, that said, there are a few early pressure points that we believe are worth watching. The industry is seeing a modest increase in severity for both medical and indemnity costs. And for accident year 2025, the industry booked a accident year combined ratio of 102. So those are a few points that we feel are worth monitoring. But again, the fundamentals of the line of business remained really sound. California, on the other hand, is a really different story, and it has been for a few years now. The WCIRB recently filed for a second consecutive pure premium rate increase. So they filed for an increase of 10.4% this year, and that's on top of last year's approved 8.7%. The Bureau called out a few things that are the major drivers of those increases. The first was the rising of claim frequency in cumulative trauma claims. The second was higher medical costs, and then they also cited increasing LAE as one of the drivers. So, those are challenges in California that are affecting every carrier that's writing in the state. We here at Employers have been proactive in our approach in California, and we feel like we're well positioned there. But all carriers are really watching what is going on there very closely. But again, I would just say that California is kind of its own story. The fundamentals for the rest of the work comp industry remain solid and strong, and they have been for quite some time.
As far as the pricing trends, over the past decade, they've been fairly benign compared to many of the other property and casualty sectors. Could you get a little bit into what's driving that, where you haven't seen those premium increases?
Yeah, it's a great question. From my perspective, what's driven the loss cost decreases for so long in workers' compensation are really two different things. The first I already mentioned, which is the decline in frequency. Frequency's been just going down for so many years. And the second, I would say, are the significant reforms that the industry put in place in the 2000s and early 2010s that were far more impactful than anyone imagined they would be. And as those reforms flowed through all the different states and their losses began to come down, the bureaus, started filing for loss cost decreases, and that has just, pushed through the pricing across the country. And I would say California is included in that. They had some pretty significant reforms back in 2013, and that really impacted workers' compensation there. It's now kind of run its course. and they're looking at new reforms in California, but other states are pretty solid in the fundamentals there, and that's really what's driven the decreases. And when I look at the industry, the two things: frequency and significant reforms.
I guess within some of those reforms, I mean, would some of that be on the part of the insurers themselves, like getting more involved, like advising in the field of loss control, for example, when it comes to coming to your clients and saying, hey, look, there's potential safety issues here. If you could remedy those, then we might be able to help you out when it comes to pricing.
Absolutely. I mean, carriers and their focus on loss control and safety and just technology itself has been part of what has driven frequency down, and then in turn driven the loss costs down in workers' compensation. So it's great for business owners when safety improves. It's great for the workers themselves because they have fewer injuries. So it helps society as a whole. It's a win-win, not just for the insurance industry, but across the country when safety improves.
They say managed care has a bad rep, but in some ways it could be actually implemented to help people get back to work quicker.
That's absolutely true. Yeah, if you view it through the lens of we're helping injured workers return to work quickly, then it's a positive outcome.
You recently announced a new Chat GPT feature to help offer quotes for workers' comp, and I was hoping that you might be able to tell me a little bit about it.
Yeah, so it was very exciting for us. Last April, employers became the first known insurance carrier to launch an app in the Chat GPT App Store. So the idea was really very simple, and that was to bring workers' compensation premium estimation directly into a platform where small business owners are already working. The work comp quoting process can really be quite complex. And in direct to consumer marketing, that complexity creates friction. So the experience that we built is designed to sort of remove that friction at the point of entry. A business owner can come in and describe their business conversationally and get a preliminary premium estimate. And then they can continue onto our website if they want a bindable quote. So our goal is really to connect with customers where they already are. And those connection points in this rapidly changing world that we're in are also rapidly changing. So we're always evaluating and testing emerging platforms as part of our distribution strategy. Here at Employers, we've been in the work comp business for more than a century. And what we're doing now is proof that longevity and innovation aren't in conflict. A company with our depth of expertise should also be the one that is really defining what comes next in the industry. So we're not waiting for the industry to define the next distribution channel for us. We're going to define it ourselves.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
So it's basically, like you said, reaching your customer where they quote unquote live.
Where they already are.
Yeah.
Right.
So are there plans to implement this on other AI platforms?
We would love to do that. We are actively, evaluating those opportunities, and where we see the chance to do that, we will. ChatGPT was just where we started.
There were some other personal lines coverages that were announced, around the same time frame as your announcement to use Chat GPT. Do you see the chat platforms becoming another distribution vehicle outside of the agent space, or is this something that would work hand in hand with what you do with insurance agents?
Yeah, so here's how it works. A business owner can download the app, and then they answer 5 simple questions through a chat GPT conversation, and then they receive a premium estimate. And if the estimate is appealing, then they're directed to employers.com to complete the process. Because that preliminary quote that we provide requires very limited information, there really isn't much re-entry on our website. But that said, pre-populating that data into the quoting form is something that we're contemplating as a next step on this journey. So ChatGPT orchestrates the conversation while our existing systems that we had already built do all the work behind the scenes. And so these chat platforms are allowing us to connect with customers, like I said earlier, in their decision journey. And it's making it easier for those customers to get coverage, we feel.
How do you see this opening the door for new markets to target? I mean, the small business space is very large. Are there certain industries that you see an opportunity to use this sort of platform, or are there spaces that are a little bit more difficult to reach from where you've traditionally marketed?
We feel like AI in general is making new markets more accessible. The ChatGPT app is really about reaching small business owners where they already are. And that same thinking can open doors in other places. When we remove that friction from the quoting process, or quite frankly, from any process, we naturally reach businesses that might not have found us otherwise. Another example is our expansion into the excess workers' compensation market, which happens just this year also. We utilize the same underlying logic, which is to take what we've already built over the last century and use that technology to reach more of the market. So for excess, we used AI to rapidly build out the platform and the tools and the analytics that we're offering to customers so that we can be a true risk management partner for self-insureds, which is who we're reaching in the excess workers' compensation market. We're viewing AI as the way, or an accelerator, right, into the entry of excess. It's allowing us to reach small business writers where they already are. And so when you look at the two of those, they're very, very different examples, but they're absolutely opening doors.
How do you see this approach affecting like your cost of customer acquisition compared with more traditional ways of reaching your customers, advertising through your agent network, basically more traditional marketing efforts?
Yeah, so I'll start with the question around our agent relationships, because I want to make it clear that agents remain central to our business, and that's not going to change. The Chat GPT app is an entry point, and it's not a replacement for agents. It creates, the way we're viewing it, a new top of funnel moment that brings customers into employers.com. And once they get there, then they can continue on their own, or they can choose to work with an agent. We know that, not every small business owner wants to go fully digital. Some are going to start in Chat GPT, and then they're going to decide that they want an agent. And we want to support that path if that's what they choose. The way we see it, really, that the more places that employers shows up, the more opportunities agents have to engage with businesses that are already familiar with our brand. Now, in terms of acquisition costs and, whether the ChatGPT channel will lower those acquisition costs and ultimately affect our combined ratio is something that we'll need to evaluate as it matures. It's definitely an immature distribution channel right now. What I always want to add is that we're not chasing volume. We're focused on reaching the right risks very, very efficiently. And if we can do that and lower acquisition costs, then that's a real advantage for us.
Well, I also think once you get the client in the door, that also offers other opportunities to, I guess, cross-sell your services beyond the insurance, like whether it's loss control or managed care or, more fee-based rather than risk-based insurance. Can you comment on that?
Yeah, absolutely. The relationship with a business owner doesn't have to start and end, like you said, with just the issuance of the policy. And we here at Employers feel like technology is what makes that relationship possible at scale. So when a business owner finds us through the ChatGPT app, and we want it to be the beginning of that relationship, and we don't want it to be just a transaction. We have extensive loss data and over a century of industry experience, and these platforms can create new ways to deliver that knowledge in the moments when it's most relevant for those businesses, which is really before a claim happens, right? Not after the claim happens. So we offer to all of our customers self-service loss prevention and safety tools. And then on the excess workers' compensation side, customers have access to our new claims predictive analytics tools, which we built completely using AI. So, we really feel like a client who sees us as a resource rather than just a vendor is more likely to renew with us and grow with us, and they're going to run a safer operation. And that's not only good for them, it's also good for us.
Katherine, thank you very much. This is William Borden for AM Best Audio.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.